Ravi Kataria, Managing Director at Imperative Associates, is here to help us navigate through that. Ravi, thanks a lot for your time. Today the market ended flat, slight profit taking was witnessed, but there's a sharp rally. Do you see some amount of correction setting in after this sharp rally, or do you think market will consolidate here or even gain ground further?
Sure. See, overall valuations wise, if we see historically, we are really trading at a high multiples of 19 to 20 on a 1 year forward earning basis. But if we see the foreign investors, they have started entering into the Indian market since the month of February. We saw 1.6 billion inflows in February. They were the net sellers till January. In March itself, they have pumped in 2.5 B in the current one till date. So the domestic investors, mutual funds have been investing in the market since the month of, say, January, but the foreign investors have just joined in the overall buying pattern that we are seeing in the Indian markets. Now, of course, valuations being high, we might see sideways trading in the markets for, say, 1 or 2 months. We see a very strong support for Nifty at around 9,050, 9,100. Unless it breaks that level, we see markets going up in the next 3 months or 4 months kind of an horizon. So we are fairly positive onto it. Unless we see a run up in metals globally, which had caused the higher inflation in the December quarter, we are positive about the overall macro fundamentals and indicators.
Right. In this, sideways trade, Ravi, that you're talking about, where does the mid-cap end of the market figure? Right now, what would you say about the valuations? Are they looking fair or are they frothy? And, we understand that in the past, you've backed chemical companies. Your favorite is Vikas, Ecotech. Talk to us a little bit about, why you're betting on that mid-cap story.
See, Vikas Ecotech is a specialty chemicals player, one of the few companies globally which is manufacturing toxin-free chemicals. Say organotin stabilizers, they're one of the top products. It's a lead-free chemical used in pipes, fittings, engineering space. The company has seen a tremendous surge in its exports over the past couple of years to almost 50% of its revenues currently. And that has been driven by the organotin stabilizer as well as the recycled compounds. Now these products are US FDA approved. So they have been accepted globally, and in India also, as and when we will see regulations towards the usage of more eco-friendly compounds and chemicals, this is a company which will see the tremendous surge in the demand. There have been players in the market who have been, shifting towards toxin-free chemicals slowly and steadily. And we saw in Vikas Ecotech, Mr. Jayant Chera from Prince Pipes is increasing its stake from 2 to 10%. The major reason behind that was, after our conversations with the management, that they are seeing a serious long-term integration with the company, a backward integration. Institutional players have started showing interest in the stock. If we see on the valuations front, it is trading at 7x EV by EBITDA, which is at par with, you can say, average trading multiple for chemical companies, basic chemical companies. Whereas the specialty chemicals globally have been commanding, say, valuations of around 11 to 12x on a EV to EBITDA multiple basis. So there's a serious valuation gap, as well as we're seeing capacity expansion to get doubled by 2019. So we have a very strong upside target for the stock in the next couple of years.
So actually, Ravi, do walk us through what the target is for, say, this year as well as next. What kind of returns do you think, this investment can fetch those who look at that stock?
Sure. So in FY18, we are expecting stock to hover around 25 to 27 on the top side. So investors can easily expect 30 to 35% kind of a return in this year itself. In FY19, our serious returns come into picture because the plant at Gujarat will be functional from December 2018 onwards. That's an expectation. Now this is a plant where they are putting up organotin stabilizers as well as recycled compounds capacity addition, just going to be 60% of the current capacity which they are having. So that's when the say our top line would see a strong impact in the FY19. So we have a price target of around 47 to 49 for that particular stock in FY19.
Ravi, what about Talwalkars Fitness? That's also your stock pick, and what's the potential here? Discuss with us.
Sure. Talwalkars is, say, expanding on two fronts actually. On a club business side, they are targeting, say, doubling of the capacity on the clubs front from 200 to 300 in India and another 100 internationally, starting with Sri Lanka. So on the other front, it has got into a joint venture with David Lloyd into the leisure space. The company is planning to come up with 7 to 10 clubs in the first year, say one year in the FY18 itself. So on these two horizons front, the company is going aggressively forward because of its strong brand PWG into the say club business. They are with the David Lloyd. So when you combine both these things, we're seeing a good top line growth of around 30 to 35% in the next couple of years. And that combined with say strong operating margins that they are operating with, a lower leverage, strong institutional interest from the buyer's perspective. So multiple things are rolling down to say a strong future for the company. And that's why we are long on its story, and we are expecting having a price target of around 295 for current year FY18.
Mm-hmm. That was Talwalkars, Ravi, but what about Visaka Industries? What's the story in this one? What kind of returns can they generate for the viewers?
Yeah. Visaka Industries in cement, asbestos and fiber sheets. It's into yarn and say construction materials, building materials. Now, the first two segments, the asbestos, the cement asbestos and the fiber sheets, they command or contribute to the majority of the revenues of the company. Rural infrastructure and road construction is given being a strong impetus by the government, and the company being a supplier of the construction material as well as building material has seen a strong growth in its say pricing front as well as demand front. They are pushing their products through their dealer network, expanding through the marketing network. If the government continues to spend the way they have been doing into the rural infrastructure for next 5 years, Visaka being one of the major players into the industry for supplying of the building materials will see a strong growth in the operating margins. Globally also, the building materials and the construction materials industry has seen a strong run because of the real estate growth. So we are seeing its impact, say, driving down to the Indian industry as well from the pricing front. As a result, we have seen a strong operating margins growth for this company in the last 3-4 quarters. So this expectations continued, like they'll see a strong operating margins. As a result, their overall growth is quite visible when we see the next 2-3 years.